Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, November 2nd, 2017. I wanted to just to really focus on the energy stocks. There's a few individual trade setups I wanted to share with you, as well as go over the charts of some of the energy stocks, particularly in the exploration and production arena, as well as a couple. I have at least one equipment and service stock. And before I do that, I'll just touch on Facebook because I've been covering the FANG stocks quite a bit recently and what's gone on in the broad markets. As I mentioned last week, as it was happening, and again in an individual post yesterday. I don't want to use the word it surprises me. Very little surprises me in this market, but it did. I was I will say, somewhat surprised that market participants, um, for whatever reason, um, put a strong bid, jumped all into Facebook and Apple. Immediately following the earnings release of the other three big FANG stocks, we had Alphabet, which is Google, um, Alphabet, Amazon, and Microsoft. All three reported last Thursday, and as I mentioned, Facebook and Apple. Facebook, who reported last night, Apple, who reports after the bell today, rallied in lockstep with those companies. And so, again, my point was, okay, maybe the rallies are justified because who knows? Again, the earnings for Facebook have absolutely nothing to do with Microsoft. They have completely different business models, different products. They just happen to be, leading stocks in the Nasdaq 100. But with that being said, they rallied. So the point being that even if Facebook blew it away, and they did, they blew out their expectations, beat expectations handsomely. But again, they already rallied about 7% leading up to that report. So how much upside was left for it? It's rare. It's not unseen, but it's rare to see a mega cap stock this large go up, gap up more than 7% in a day. So there it is. Most of, actually more of, I should say all of, and then some, according to what the market thinks, because it's down almost 2% today. All of the positive earnings beat and then some was already priced into Facebook. We'll see the same if the same happens to Apple. Apple already started to get a wake up call yesterday, right after I sent that post, and started going down. They report tonight. Again, anything can happen, but as I stated then in the post yesterday, Apple rallied about 8%. Again, solely, the correlation was immediate and positive. There was no doubt that the rally started right when the other three FANG stocks, right after they reported the next day when trading opened. So yesterday we did put a bearish engulfing candle. Be a little skeptical right now. I always say you need to see a couple follow-up days downside, but we'll know by tomorrow, the end of day tomorrow. Let's say we end up closing down today, or even flat. Let's see what we do tomorrow and Monday, but this could be a significant candle for Apple, especially if there's a disappointment after earnings. So that's it. There's the same divergences I've been pointing out forever. When you go back to Facebook, which I left, to me, it's simple. Guys, drop me a line if I missed anything. I don't try to put these, make these divergences and things fit just to make a case. I'm just pointing out this is a 2-year chart. I tried to do my best to point out every single divergent high that Facebook has put in for the last 2 years. Without fail, they've all resulted in a correction. I see no reason why this one won't. Again, unless it's burned out, it's still potential divergence. Potential because the PPO at this point in time is still pointed higher. And what that means is as long as it's pointed higher, it could continue to move higher. And if it takes out the previous reaction high, you no longer have negative divergence because your indicators have now made a higher high along with prices making a higher high. Negative divergence is when prices make higher highs and the indicators make lower highs. So that's that. Look for, just keep an eye and see what Facebook does in the next week or so. If that PPO curls over, makes a bearish crossover, you have now confirmed negative divergence. You already have the RSI rolling over. And again, these corrections have ranged from as little as 3 and 6% to as much as 10, 16, 18%. So you're looking at an average there of probably double digit drops even within a larger bull market. That's all we're talking about right now. So all we're looking at are just swing trading ops, and the charts are pricing one in for Facebook. Excuse me, guys, a little bit under the weather here lately. Okay, let's just jump into the energy stocks. I'll give you some of the trade ideas. I'm going to start out with one. Now, this would be can be taken one of two ways, either as an aggressive trade in anticipation of an earnings beat. Now, normally most traders, not only would they not take a position right in front of earnings, but they would close a swing trader. Many of those swing traders would close a position just before they report earnings as to not get caught on the wrong side of a gap. You have that overnight risk. If you have a company reporting, it's either going to report before the market opens or after the market closes. The majority of companies, once in a blue moon, you get one that reports during market hours. So therefore, you get those opening gaps. Now, so you can certainly wait if the market's reaction to earnings is not very positive. This one's probably going to want to work down within this bullish falling wedge because we're right at the top now. We're at downtrend line resistance, which is another reason. Technical analysis or trading 101. You sell stocks at support, or you wait for a breakout above. You sell a stock at resistance if you took it down here, or you wait for a breakout of resistance for a buy signal, but you don't go long at resistance. It's contrary to trading. But with that being said, and I'll make the case here that there's been a very clear pattern lately with a lot of these, especially the E&P stocks, exploration and production, oil and gas exploration and production sector, as well as the equipment services and other things in there. They're doing very very well, and we've seen a clear pattern of these bullish falling wedges, or at the very least these divergent lows like this that have produced a nice breakout to the upside. So there it is. There's your bullish divergence. Uh, you can either wait. And now the thing is, these are price targets up here. Stocks like this, typically, if you're going to get a gap tomorrow, it's probably going to be, there's a good chance it'll measure in the double digits, either to the downside or the upside. And again, there's been a clear pattern, a very clear pattern that favors an upside breakout. That doesn't mean you're guaranteed by any means. There are no guarantees in trading, but I'll show you that in a second here, what the recent history has been. Now, if this one gaps up, let's say to this target here, I have around 564. That's about a 24% gap. That's no longer an objective entry. So the thing about this is, if the reaction to earnings is positive, you're probably going to get left behind. The first target here is at 511. Even that is, from where we're at right now, that would be a gain of about 14% if it hits that first target. And I think that's a very likely target. It's a very decent resistance level. So trade it as you want. Again, I just wanted to point it out. Let's look at a couple here, other ones in the E&P sector. CRC, California Resources Corp, looks the same. There's your bearish falling wedge, bullish falling wedge. There's your positive divergences. There's the first thrust up, little pullback, and now next thrust up to that target here around 1240. So that one's at resistance, but I wanted to show you this clear pattern of these bullish wedge patterns, and they've all been breaking out. And I'm only going over a fraction. There are a lot of stocks in the E&P sector. OAS, Oasis Petroleum, bullish falling wedge, pretty clean. There's your divergences that confirm the bullish nature of the wedge. There's your breakout and back test. Even if you took it at the breakout point, the best entry would have been the back test. But even if you took it the breakout, rode out that back test, that thing's rallied in just a couple months about 37%. So again, and they're trading very well to the technicals. I mean, if you look at that falling wedge, you look at the perfect breakout, back test, you can see the resistance right here, all these reactions. That's why I had the line there. And you can see we took out that level, came back tested it for a couple weeks. That support held. Resistance, once broken, becomes support, and boom, the next thrust up. All right, next one up, WLB. And I'm showing you again, a lot of these aren't, some of these I'm showing you are not objective entries at this time because they've already come up too much or they're maybe a little near-term overbought, but I'm showing you the pattern here. This is the only coal stock I was looking at today. I'm focused on the energy stocks, the gas and oil, but here's a coal stock for you. I don't see any buy signals yet, but we have potential. It's pretty strong divergence here, and this one's just gotten the tar beat out of it. And you can see it's pretty low price, speculative, but look for a potential buy signal. I'm keeping my eye on this one. Next one up, QEP. QEP, you can see a very clean downtrend line. In fact, it was a descending price channel. Here's your price channel, these two lines, bullish divergence at the lows, breakout. We came up, you can see a little gap right here. We came in, backfilled that gap, pulled back down, put in a higher low, and boom, now we've made a higher high. So this is, a simple definition of an uptrend is when a stock is making a series of higher lows and higher highs, which is what we've been doing. And we had the breakout. We also had a little sort of a basing pattern there we broken out of, so that one looks good as well. And again, this is oil and gas integrated right here. DVN. Devon Energy, you can see nice downtrend line, very well defined. Again, technicals working really nice with these. There was, yeah, I could draw some divergence here at this low. If I had a couple of little small trend line right here, uh, came up, flagged a little bit, broke out, and it's been moving up since. So again, I'm just trying to make a common theme here that the trend is up, and not only is a trend up, but there's a lot of recent breakouts of these patterns, these downtrend lines. Just like I start out with SN, Sanchez Energy, you see the downtrend line with that, and that's one that hasn't yet broken out. So that's one that's on my radar. CPE, Callan Petroleum. There it is, divergent low there, consecutive, another, an extension of that bullish divergence, broke out, back tested right there, and now we're at resistance. You can see this line here has defined. There's a lot of reactions right there. So we need to break above that 1165-ish level, a little resistance there, and then longer term it looks good. WFT, this one has meat on the bone right now, I think. This one actually just reported yesterday, so earnings are out of the way. It's in the oil and gas equipment and services sector. In fact, I need to jump back to a 2-day period chart. This is 4 years of price history. This yellow trend line has capped all the advances going back to this point here. So very well-defined trend line. The stock broke out, came in, made a low-level back test, even briefly fell back below that trend line, but most importantly, it has respected it since. It regained that trend line. Now it's been back testing, working its way lower, but what's happened is most recently you have some nice divergence. I don't have it drawn out here. Let me show it. There it is. So you have bullish divergence. In fact, you had divergence really going all the way back to that point in time there. But either way, so divergent low, back test, and earnings are out of the way. At minimum, I see this one working its way up here to that 475-ish level. And I haven't really cleaned this chart up, but I just wanted to share that. That one looks good. WTI, W&T Offshore, that's an E&P stock, oil and gas E&P. There it is. Beautiful falling wedge pattern, well-defined, bullish divergence, everything I like to see to confirm it. And that one just exploded like a rocket once it broke out of there. 83% gain in short order, pulled back, looks like it's flagging now. Again, I'm not chasing this one. I'm not recommending, or I don't make any recommendations. I'm not pointing this out as a trading up at this point in time, maybe longer term, but I am pointing out this common theme of these breakouts, particularly these downtrend line. Most of them are bullish falling wedges or price channels, and so we have a couple yet that haven't popped, and that's again the point for this video, so you can take some trade ideas. Some of these that haven't moved yet, like SWN, Southwestern Energy. It's another oil and gas E&P stock. There's your downtrend line. Forget about all the other trend lines on here. Focus on this trend line. Here, I'll color it yellow. And there it is, double divergence, divergent low, bullish divergence right there at the lows, yet to break out. First resistance at 630. In fact, this one also has a nice basing pattern there. So two ways to play it. You can take the breakout of the downtrend line, but the most powerful buy signal will come on a definitive or impulsive break of this above this 630 level, as that's a nice spacing pattern right there. And as well, of course, you will have taken out the downtrend line and, target this one, I think ultimately works its way up to about the $9 level with a little reaction along the way about just over the $7 level there. Okay, guys, there's like a gazillion of these that just stand out and, beautiful charts in the E&P, oil and gas E&P sector. So I'll just stop it here. This is XOG, Extraction Oil and Gas. Again, not that I would chase this one at this point, but I wanted to, again, show you the common theme here, these divergent lows, downtrend line breakouts. You can see the impulsive sticks. Again, this is all technical analysis just working well in this sector. That's what's been driving these. The fundamentals have been questionable, especially on some of these lower priced oil and gas stocks in recent years with the collapse of oil prices. So most people know, hey, a lot of these companies, are on the verge now. There's some fundamental issue, cash flow issues, things like that, with the price of oil being down. What it appears, and I've seen this before, that even the fundamentalists will turn to technicals, and you're seeing that. Again, I went over a lot of these charts. These trend lines are well defined. You get that breakout. You can see the impulsive candle. You see the follow through. Um, Again, not that I would chase this one at this point in time, but my focus now is to find those that haven't yet broken out, haven't yet joined the party, but are setting up bullishly. And I gave you a few names there: SN, WFT, SWN. And if you want to look at that coal stock, WLB, I'll keep an eye on that. I'll have to look at some of the other coal stocks too to just confirm that the sector is poised to rally as well, because I wouldn't want to go long a coal stock right now if the sector still has more downside. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.